Hello, everyone. Welcome to today's talk. We'll be discussing about the financial market participants. Of course, on your way to financial freedom, you should know about the financial markets and who are involved in this market. So join me today as we join into this market participants talk, so that you understand who are the big boys and where you too can fit in this financial market participation. First, we look at the central banks. Of course, we are going to look at them. They are the first on our list. We have the international banks, we have the international investors, the multinational corporations, of course, domestic corporations also, not forgetting them. Then, private investors also. Okay, we have the tourists, and of course, the retail traders. Okay, first, let's go to the first one, central banks. Yes, who are the central banks and what do they do? Now, every country in the world has a central bank. Well, in the US, we call them the Federal Reserve Bank. Of course, in Japan, we call them the Bank of Japan Monetary Policy Committee. Okay, we have people like that. They influence interest rates. Let's go to the slide. Okay, central banks, they control the national money supply. Okay, they control the production and also how it is being distributed in the country. Of course, it's used to influence interest rates. If we have too much inflation, the central bank will come in and, of course, raise interest rates so that they will bring down that inflation down, so that they will slow that growth, so as to make the economy to pick up once again, so that the price of things will drop, so that it will spur consumer spending. And of course, if you spur consumer spending, there's enough money to go around. One man's spending is another man's income, right? One more thing, they also regulate member banks. Every central bank has other banks that look up to it for supply. Okay, now not every bank can print money, right? But the central banks can do that. So they alone can regulate these banks. Also, they regulate them in terms of capital requirements. Every bank should have a capital base, and of course, the guaranteed deposit they guarantee it. Okay, we also have them as an emergency lender to distressed commercial banks. Yes, many banks that don't have the capital base in some countries, the central banks come into it. But this time around, I think most central banks do it in such a way that you must have a required capital base. So, in case of any issue that the capital base doesn't sustain, the central bank can come in to your rescue. Okay, then they manage foreign exchange reserves. Every country has a foreign exchange reserve, and it comes in terms of maybe trade surplus. Maybe they have some mineral resources they export, so they have foreign exchange reserves, and these foreign exchange reserves are kept in another country. Okay, for example, the Japanese can keep their money in dollars in the US. China can also keep their money, their reserve money, in US currency. Yes, it's denominated in US currency. So what does that tell you? It tells you that there's a way you can curb some interest rate risk by doing that. Okay. So China is the largest uh, reserve. They have the largest reserve of foreign exchange in the world right now. It's about 3 trillion, more than $3 trillion in the foreign reserve. Okay, let's continue. Next is the international banks. Of course, if you look at this picture, you see the Barclays, JP Morgan Chase, well, Morgan Stanley is not actually on this picture, but also have the Goldman Sachs. These are international banks. HSBC, the Deutsche Bank, the Citibank, the Standard Chartered. These banks are international banks. Okay, so what do? They control 63% of market volume. So market volume is controlled by this international bank. Of course, they cut across countries and the continents. Okay, so they are found everywhere. If you want to do international businesses, you have to talk about these banks. So if you are talking about these banks in other countries and they are found in many continents also, it means foreign exchange must be traded, must be exchanged. Okay, so they provide trading platforms. So most hedge funds use these international banks. Okay, so they help them in their trading. Okay, their trading needs. Right. They also facilitate foreign exchange positions. Yes, they do that. They facilitate foreign exchange positions. So international banks also they trade. Yes, they trade. So they help large volume of transactions to be transacted through them. So there's exchange of currency from one currency to another. Okay. So the JP Morgan, the Citibanks, all constitute the international banks. So let's move forward to the next people. Okay, the international investors. We have international banks, we also have international investors. So what do international investors do? They use foreign exchange to facilitate the sale and purchase of assets. Yes, since they too cut across continents and countries, of course they have to facilitate. They can buy real estate, they can buy companies, they can buy stocks and bonds from countries that they don't even stay in. Okay, they are not even domiciled in. They can buy it. They are international investors. Okay, they may use the market to hedge current foreign exchange exposures or rebalance multinational portfolios. What does this mean? Okay, somebody in Japan wants to buy a product in the US, of course, they have to hedge their position. They have interest rate risks. So interest rate risks means you have to find a way to curb that risk. Of course, you have to hedge it. Yes, so they do that. All right. We also have people like the hedge funds help them to do those kind of things. All right. We have the pension funds. We have sovereign wealth funds. They are also international investors. Some pension funds from other countries may want to buy some countries' stocks and bonds. It happens. Okay. Sovereign wealth funds. We're going to be discussing about them also. Private family offices. Okay. Then prime brokerage. Let's look at the first one, hedge funds. Hedge funds. If you're in the financial markets and you don't know about the hedge funds, I don't know what you're doing. You're supposed to know these guys very, very well. So what do they do? This is an investment structure that uses pooled money. What do we mean by pooled money? That means people gather money, they bring it as one into one basket. Okay, they bring it into one place as a lump sum from accredited investors. Not everyone. They don't collect money from just everyone. You must be accredited. Okay, to invest in securities or other types of assets with the goal of producing positive returns. So these hedge funds, with the pooled money they have with them, manage it to produce profits. Every business, of course, must produce profits. So this is what they do. So they deal with the international banks. You remember we spoke that we said the international banks provide trading platforms. Now these hedge funds use these trading platforms of these international banks to facilitate transactions for their clients and make profit for them. Okay, look at pension funds. All right, who are pension funds? Pension funds, they provide benefits for employees upon retirement, helping workers plan future spending. Of course, if you want to retire, you should have money with you. It's not like you retire and you have nothing at hand to continue. You understand? So, pension funds also help the worker to plan for his future. All right. So, the employer most of the time makes most of the contributions. Yes, they make most of the contributions, and most pension funds, of course, they trade. Yes, you remember they work, they are also international investors. They are international investors also. They can buy stock and bonds, assets, securities from other countries as much as they can because they should have money enough to deliver when time comes for workers that are going to retire, right? Then we have sovereign wealth funds. What are sovereign wealth funds? Okay, sovereign wealth funds, these are state-owned investments fund, which comprise of money generated by government, often derived from countries' surplus reserves. Yes, I said earlier that most countries have different things they do. Some exports, some have some mineral resources that they have. They can sell it and make profit. Now, if they make profit from this, they want to make profit from this reserve. They want to invest this reserve and make profit from it also. So, what are these sources? How do these people get the government? How do this government get some fund? Okay, what are these sources? State-owned natural resources, as I've said. Okay, trade surplus. Yes, maybe they export and they acquire more foreign exchange. Okay, and it's added to them as profit. Yes, they can invest part of it to invest and get profits. Very possible. Of course, some go to the international banks, investment banks. Now, these investment banks help these countries to make profit. Okay, foreign exchange currency operations, of course, then money from privatization and so on. So many things, as long as it gives revenue. Anything that gives revenue, even if their internally generated revenue increase and they have much more than they need, there's a high chance that they can use it and go to the investment banks and of course have them make profit for them. All right, next we're going to be talking about private family offices. If you're wondering, what do we mean by private family offices? Okay, these are private wealth management advisory firms, okay, that serves ultra high net worth individuals. Okay, some high net worth families have these wealth management firms that help them manage their wealth. Of course, every family wants wealth to be transferred from one generation to another. So you don't want your family or your children or whoever is involved to squander your money when you are gone. Okay, you want to still make profit. You don't want to drop from the Forbes list, things like that. You understand? So people go to these firms, wealth management firms, to see to it, okay, how do they invest their money? Is it mutual funds, ETFs, stocks, bonds? Do they help them diversify their portfolios? That's what private family offices do. Okay, let's look at the next one, prime brokerage. Okay, as the name implies, prime brokerage, they help broker deals for like people like the hedge funds. Okay, let's look at what we have here. So there are large financial institutions that offer services to large institutional clients or hedge funds. So if you're an institutional client, of course, institutions are not actually individuals. Okay, they are large companies, corporations, and all that. Okay, example like the hedge funds that we have here. These international banks offer this prime brokerage. Of course, you remember I said the international banks help facilitate trade platforms. Okay, so these hedge funds are institutional clients for these international banks. So they help broker their transactions, the bulk of their transactions. Hedge funds actually have large liquidity, large foreign currency, large assets and securities to move around. So they need banks that can handle such kind of transactions, and of course it has to be international banks. That is what prime brokerage is all about. Let's look at the next okay slide here. Okay, they allow hedge funds to borrow securities, just as I've said, and increase their leverage while acting as an intermediary between the hedge funds and counterparties like pension funds and commercial banks. So you can see all these we have here are all institutions. They are all institutions, so they have to work with this prime brokerage to facilitate all their transactions. Okay, so their main clients are pension funds, institutional investors, just as we've said. All right. Okay, let's look at these institutional investors. Who are these institutional investors and what do they do? All right. So they are still part of the prime brokerage. So under the prime brokerage, institutional investors are there. So these are companies or organizations that invest money on behalf of their clients. Exactly what I've said earlier. The hedge funds do that. They invest on behalf of clients and they need those banks to facilitate their transactions. All right. So hedge funds, mutual funds, endowment funds, and many of them. All right, let's look at the multinationals now. Okay, multinational corporations. As you can see on our picture here, we have many of them here: Siemens, Ericsson, Merrill Lynch, Johnson and Johnson, Bridgestone, Citibank, as many of them as you can see on this screen. So who are these people? They balance their varying income and expenditure levels in different currencies. Of course, they are multinationals. As multinationals, they are in many countries of the world. Most of them are found in every country in this world. Okay, and of course, they have to pay their workers or buy supplies, raw materials, goods and services from one country to another. Okay, they need to pay clients, they need to pay workers, they need to pay contractors, in different countries, in different currencies. So they need to balance their income in these different currencies. Of course, they need to go through some of these banks and all. All right, these are multinational corporations. So let's look at the next one. All right, domestic corporations. Who are domestic corporations? Now, every country has its own local corporations. Okay, they have their own local companies. So these companies are domiciled in the particular country. So they are not international, but they can have international purchases. They can buy things from outside their country, from abroad, and the countries other than their own. They can also get services from countries other than their own. They can import to or export from. Okay, they can export from and import to. Okay, let's look at what we have concerning them. Okay, they engage in importing and exporting goods and services, those I have said, and manufacturers may import production materials. Very possible. Some can transport production materials. You don't even need, they don't need to actually do the whole product. Okay, they can transport what they have in raw form and maybe assembled in another country. This is very, very possible. Okay, so their producers may export some production. Okay, it's still the same thing. So it may be they may take their workers and move things around. Okay, they can transport services too. Okay, they can move the contractors. Maybe they are a construction company. They can say, okay, fine, we can move our people out. Let's go work, and you come back. All right, very possible. So next, private investors. Private investors. All right. So these are individuals or organizations willing to invest their own money, okay, in a company to earn profits on their investments. Just like we have institutional investors, also have these private investors. They are individuals and they want to invest their own money, okay, of course, to make profits. So these are the private investors. So they go through all the proper channels to make investments. All right, now we can look at tourists. Yes, if you've traveled to one country other than yours, of course, you must have been a tourist one way or the other, maybe for schooling, for business, or even for pleasure. Okay, so tourists are part of the financial markets because why? They exchange their own currency for another. You want to travel from France to US. Of course, you have to change your euro to dollars, of course. So these people participate also in the financial markets. So they purchase foreign exchange when traveling to another country. Next, we'll talk about the retail traders. So this is where you and I come into place. All right, the retail trader. We can see a young guy looking at his phone, trading, and looking at his PC and trading. Okay, so who are the retail traders? These participants are expanding due to the ease of access to international markets. Yes, just like trade and FX, they give you access to the financial markets. So individuals like you and I can come into the financial market and trade the financial market instruments. Okay, so you and I can trade because we have access to international markets. Okay, financial asset transactions can be initiated at the click of a button. Yes, at the click of a button, you are linked to the financial market. So trade and FX brings you and connects you to the financial markets. At the click of a mouse, you can click a buy and you are filled instantly. You click a sell and you are filled instantly. So the leverage nature of retail trading has expanded foreign exchange product needs. So because of leverage, you maximize your buying power. You have little margin to trade more positions, which is not found anywhere before. Okay, but it's now here for you and I to take advantage of. That's why Tradeland FX have this presentation for you, so that you know that there's a leverage market where you too can participate, like these institutional investors, these multinational corporations, international banks, and all others. So you can participate in this market as a retail trader. So since you've known about the market participants, you can open your live account with Tradeland FX. Then you'll be part of this market participant. You'll be in the financial market and you'll be a participant. Open a live account with Tradeland FX. I'll be glad you did. Cheers.